All right. Good day, everyone. This is Sarah Bamba. I believe this will be our first official video. Although I've had other video on Zwitch Academy channel, but this will be our first official video on this channel on YouTube. I'll be teaching on technical analysis. Like I'll combine. There was a day where that was last week. We're supposed to have the classes, and we had, but we had network issues the first day. The second day we had a smooth class. So I just want to do a combination of both days and present and teach technical analysis, the technical analysis that works. So as you are coming to this YouTube channel, I have to upload it here. Do well to like, do well to subscribe, do well to share, because more videos will be coming on this channel that will teach about the crypto market and the forex market. We are going to be having more videos. So I'm going to be sharing my screen now so that we can, I want us to see my slides. So let me start from the beginning. Okay, from the beginning. Okay, so like I said, we're to look at the proven technical analysis method that works, that has up to 90% accuracy. You can use this method to trade your crypto. Those are trade futures. You can use it to trade futures. You can use it to trade stocks, bond, and forex, etc. You can use it to trade these stocks. Okay, so this class was Ed. It actually Ed, just that we had network issues. That's why I'm doing this combination of both sessions in one. So let me go further. I am Abamba Sarah. I'm an educationist. I studied education in school, and I love blockchain. I love tech. I don't used to be like this. I used to love anything manual, but now I'm so in love with tech and blockchain. Then I'm a crypto and forex trader full time. This is what I do for a living. And I'm also the founder of Zwitch Academy, an academy that teaches how to trade the financial markets. Okay, so that's just a brief introduction about me. Now, what I'm going to be teaching you, like I say, it has up to 90% accuracy. Now, these are just testimonials from my signal room. This person made $7 in profit in a day. Imagine for those of us in Nigeria making $7 7 times, and exchange rate now is up to 700. 7 times 7, that is around 4,900 naira in a day as a passive income. So if you cumulate it in 10 days, just calculate, do your calculation. So this is what, as in this person has profited from the signal. This is the same thing I'm going to teach you today, not something different. Okay, not something different. Then this person say, this is how my day went. That I'm seeing $5 there, I'm seeing $4, I'm seeing $2 in a single day, $3. If I calculate $1, $2, that is $3, $4, that is $7, plus $5, that is $12, plus $3, that is like $15. I'm not adding the other, like the cents. I'm not adding the cents, just the main dollar. That is like $15 in a single day. Trading this market, there is profitability in this market, and I'm going to teach you how to do this, how to be profitable in this market, how to do your analysis and make profit from this market. So I'm not just going to teach you something vague. People are making, as in this, if you can see, this is my signal room. People are making money from this place. The same thing I'm teaching you today. So what is technical analysis? Technical analysis is the process of using chart patterns, historical data to predict the future of a given asset or financial instruments. Of a given asset or financial instrument. That is what technical analysis is. And you use your chart to analyze the market. Now, it's not like fundamental analysis. You know that in fundamental analysis, we use news, economic data, financial data and anything that politics and all of those stuff to predict the future movements of the market. Now, fundamental analysis is more like using the present to predict the future, while technical analysis is using the past to predict the future. That's just what it is. And like I said, that what the major tool for technical analysis is your chart. Is your chart. So let me show you, for those that don't know what the chart is, I'm going to show you what the chart looks like so that you not be lost. So I'm going to my trading view right now. Let's see, what is this chart? What is this chart? Okay, now this is my trading view. This is what the chart looks like. As in this we are seeing now, this old thing I are seeing now is chart. This is the chart. So let me go back. We'll come back to this later. So let me continue. Okay, so all right, so now let's look at the first thing that you should master in technical analysis is support and resistance. If you can master support and resistance, 50% of your trading journey is solved. Like of your technical analysis journey is solved if you can master support and resistance. Now, what is the support? The support is the lowest point of a chart from which price reverses to an uptrend. We have different types of trend in the market. We have the uptrend, we have the downtrend, we have the ranging market and the shopping market. The uptrend is a trend whereby the price continue moving up and up and up and up and up. In an uptrend, you buy. While the downtrend is a trend whereby the price is continually moving down, down, down. In a downtrend, you sell. But the ranging market is a type of market whereby the price moves between the support and the resistance, like it's just going back and forth within support. If you get to the support, it buys. If it gets to the resistance, it sells. So what you do is to buy and sell. This is an apple. I'll show you. Let me just show you something like, let me go to my chart and let me show you a ranging market. I think people are not really used to ranging market, but they are used to support and resistance. This is 1 hour time frame. This is a ranging market. As you are seeing it now, it's a ranging market like this. You see resistance, support. So the prices will just be moving back and forth like this, back and forth. So when it gets here, let me see if I can go backwards. Okay, you see. So the prices are just moving what, back and forth. So you buy from support, sell from resistance, buy from support, sell from resistance. I think a perfect example is USD. Let me check if I can see USD. Come on. I'm going down. The US dollar actually gave something like this. Okay, yeah, my US dollar. I think it gives me a perfect example. Okay, here we have it. You see this? It's just going from resistance, sell, buy from support, sell again, buy, and all of that. So in this type of market, when it gets sell, you buy. When it gets sell, you sell. This is a ranging market. Okay, so now let me go back. I was talking about support. I just wanted to shift that in because it's not in the slide. So for the support, it is a buy signal. The support is a buy signal. So when you see the price at a given support, you buy. And also the support shows that the bears are losing momentum and the bulls are taking over. There are 2 types of players in the market, the bears and the bulls. The bears are those that are selling the market, while the bulls are those that are buying the market. So at the support, the bulls are in charge of the market. So the market is going to buy. Now the support is also known as the floor, like floor. You know, you stand on top of the floor. You stand on a floor. So now let me go to my chart. I will always show you examples. I'm not just talking from my head because it's what we have seen in the market over time. Let me see a bigger time frame. Okay, now these are supports. This is the lowest part of a chart. Now I want to see. Okay, now should that, okay, let me use gold for this example. I want to use now what I'm using Forex examples. What I'm teaching you can use to trade crypto. I told you the chart of every given price is the same. It's the same. It does not change. The chart of any financial instrument is the same thing. So you can use one knowledge to trade another knowledge, to trade another market. So now, for instance, this is actually a crypto example, not a Forex. This is Ethereum and USDT. Now the price got to this place, this first part of it, and started buying. This was 27th of what? Of June. Sorry, 17th of June. Now, on the 30th of June, it came down to this place again and it bought. On the 12th of July, it came back to this place for the third time and it's what? It bought. So this is what? A support. The lowest place of the chart from which the market starts going up. Now, let me see other examples. This is an example for crypto. Let me see if I can get one here. This is for another crypto example. Let me use daily. Okay, now this is a crypto example. This is AVAX and Theta, that is USDT. Now this is a support zone. This place is a support. Now imagine this was on the 25th of May. From here 19th of May, price got to this place, this lowest place, and it bought, like it bought and bought and bought. It started coming down. So this was 2021, last year. Now 2022, 13th of June, it came back to this place and it's reversed up. Now it's here again as having a sign of reversal. Let me expand my chart so that you can see it properly. You can see that market always react. The same support of last year, market came down and it respected it. This is how powerful support is. So when prices get to a support zone, what you do is to buy the market. You don't sell the market. When prices get to a support zone, you buy. You buy the market. Don't sell the market. That is what you should do at a support. Okay, I want to show you Forex examples now because it's the same knowledge. You use it to trade the pairs. Use it to trade Forex, use it to trade crypto, bonds, and what have you in the market. Just use it to trade. Now, this is another example. This is now a Forex example. This is on GBP AUD. I told you it's the same knowledge. Now look at this first support here. 4th of April, price came down to this place and it's what? It's reversed up. Now I should just mark this point that this first support. Now I should know that anytime price comes to that level, it's what? It should reverse. So from this is 4th of April, this is 6th of May. The price came down and it's what? Reversed. So imagine placing a buy signal from this point. And you just allow your trade. Now the thing just dance around before finally breaking it. But you should know that you'd have made good profit from this place, this zone, by simply trading along with a support. Now this is for the support. Now let's continue. I have a whole lot because this is a combination class. I have a whole lot to cover. Now this is the example of a support. First support, another support, just the price reversing upwards from the support. Now let's look at the next one, the resistance. Now the resistance is the highest point of the chart from which the price reverses downward. Now it's opposite each other. Support, the price goes up. Resistance, the price comes down. Now the resistance is a sell signal. When the market gets to a resistance, it will sell. So what you do is to place a sell order. Don't place a buy order. Now, like I said before, there are two players in the market, the bulls and the bears. What you do is to trade in line with them, don't trade against them. Now it shows that the bulls are actually now losing momentum. while the bears are what taking over. And the resistance is also called the ceiling, like ceiling up. Not that anything that goes up must surely come down. So it has gone up to where the ceiling is and start coming down. Okay, so let's go back to our chart and see resistance. Now, this is a beautiful example. You see this resistance here, price came down. This is now a zone. This was on the, this is a major resistance, 19th of August 2021. Price came down. It gave a minor resistance. The price also came down 30th of November to respect this minor resistance here. Then it went up again to respect this what? This major resistance. On like from 2021, or this is February 2022, and the price has been dropping since then. So what you do in a resistance is to sell. You don't buy. You sell. You don't buy. I want to use BTC. I saw one powerful listing on BTC. Let me show you that. And BTC has been falling since then. Let me show you that. This is a Bitcoin on monthly time frame. A very strong resistance that BTC respected. And it has been falling since then. Okay. Now look at it. Let me expand my chart. Look at this market. BTC now got to this resistance. Wow. Okay, here's where we are. Now this is a resistance. This resistance was 1st of April 2021. BTC got here 1st of November 2021. And since then, now BTC went to $69,000. And it has been falling since then. It's presently at $19,000. You see how powerful support and resistance is in the market and this chart. So people that used to trade futures, maybe me, I don't really trade futures. I don't trade crypto futures that much. So people that trade futures, look at it from here. They should have short the market, means sell the market. And like if they held it for long, you see how long BTC has fallen. So let me use another example. This for crypto. Let me use another example. For a resistance, we are now looking at resistance. I've seen the two major things in crypto trading. In trading, support resistance is very, very powerful. Don't joke with them, especially the ones at higher time frames. We'll look at time frames later. Come on now. Okay, so now let's look at, I'm looking for resistance now. Let me, this one is giving what I call diagonal resistance, not horizontal resistance. If I draw a trend line like this, let me draw a trend line, you see the resistance. Let me draw the trend line from here, this point. Let me take it down. Okay, so drawing this stuff like this, you see the resistance. This is a resistance. So this is not like a straight line resistance or support. Now let me look for another examples. Let me check higher time frames. Let me check higher time frames. Wow, resistance everywhere. This is a resistance. 7th of June. It came here again, 22nd of June, dropped. Came here again. This is more like a Shopee or ranging market though. That's why it's always like this. Let me look for down to use. Let me move further. So we are seeing support and resistance. If you can master support and resistance, I bet you half of your trading journey is solved. Like your technical analysis journey, half of it, you have solved it. If you can just master support and resistance. It's as simple as that. Now look at, okay, I wanted to look at the support here. The market came down this place and respected it. I wanted to show you. Now this is a resistance. This is a resistance. The market has been fighting with this resistance for long. It came down again, dropped, came down again and dropped. So let's go back to our slide. That is for resistance. Now look at it. Just where the market drops from, it's called the ceiling, the highest point of the chart from which the market drops down from. Okay. Now, okay, this is now the same thing I've been teaching you. It's not something different. People are using it to make money in the market. My students, those in my signal room, they're using it to make money for the market. I started trading live today. Started trading live today. I made $96 that same day. This is like mind-blowing, right? In one day, $96. You know, this thing has to do with your account size. The first person was $7, the other person was like $12. This one is $96. Just all depending on your account size. Okay, now this same person, another one, this is a total of $392. The same person, the same day, I think the same day, 30th of May, the same day, 30th of May. So my advice is to ensure to withdraw profit. Now let me just shift this in. Anytime you are trading and your trade goes well, please withdraw your profits. Don't leave it in the market, because you might get too excited and the next day that same profit you made, you will lose it. So just ensure that as you are making profits, like withdraw half of that profit, especially when it's big, like this one is $392 in one day. Just withdraw half, like half of the profits. You understand? Just withdraw like half of that profit, so that you will not be too excited and give your money back to the market, because it happens. Okay, so this is the advice I gave to the student that just started trading life, and he was so excited. Okay, let's continue. Let's enjoy profit too. Okay, this one say by carefully following teaching, $10 already, and it's not yet 12 p.m. This was around 9 in the morning. This person has already made $10. And like I said, everything is depending on your account size. Just by what is the same person. This person is in my academy too. So $10 in a day, not yet what 12. This market has a lot of potential. You need to learn it, master it, and you start reaping the fruit. Now let's look at candlesticks. Candlesticks, very, very powerful and important. We're going to be looking at the anatomy of candlestick. Now let me use my whiteboard for this one. Using my whiteboard, the anatomy of what? The candlestick. Now the candlestick shows 4 things. The candlestick shows 4 things. What are those 4 things? It shows the open, it shows the close, it shows the high and the low of a given price, like the price, the high, the low, the open, and the close. That is what a candlestick shows you. I think the screen is obvious. So it shows the open, it shows the close, it shows the high, and it shows the low. This is what a candlestick tells you. So it shows you where the market opened, how high it went, how low it went, and where it closed. For example, let me draw. Now, for instance, the market opened here. No. For instance, I want to use, for instance, my market opened here. It went as high as this, went as low as this, and it closed here. So let me draw it together. This is what a candlestick looks like. So it shows what? The open, it shows the close, it shows the high, and it shows the what? The low. Now, for this is a bullish candlestick. Now, for a bearish, there are two types of candlestick: the bullish and the bearish. The bearish actually shows the open. The open is below. No, open close. Okay, this one is a bearish candlestick. Let me draw the bullish candlestick. Let me erase this one. I've made a mistake this one. I'll take that again. Now, this is a bullish candlestick. This is a bearish candlestick, sorry. No, we used to use bullish first. I don't know why. Let me draw the bullish candlestick. So for a bullish candlestick, the market will open below. It will go up, and anywhere you want to go to or lower, it will open below. And when go high, go anywhere, then the close above. So for the bullish candlestick, the open is down and the close is up. Like the close is up, where the high and the low are at the same place. They are at the same place. Why is this so? So for instance, Ethereum opened at $1,000. Now it went as high as let me say $3,000. It went as low as $500. Then it came down to close at let me say $2,000. So it opened at $1,000, closed at $2,000. That is bullish for that time frame. Whereas for the bearish candlestick, it opened at $2,000 and closed at $1,000. That is bearish. That is bearish. So this is the anatomy of your candlestick. Like I said, some persons are used to use the darker shade. For instance, for this candlestick, it will be shaded like this, like colored. For the bearish candlestick, while for the bullish, it will be open. Now let me go to my chart and show you this. For the candlestick, this is the candlestick. I will always give you examples. Now, these things that we have been seeing like this, these are candlesticks. Let me expand it so that we see more. We have a better view. Okay, so this is the candlestick. For this is a bullish candlestick, while this is a bearish candlestick. For this one, the market opened at $1.418. It closed at 1.46, 41 to 46. So you see that the market closed above it opened. Whereas for this one, the market opened at what? 1.46 and closed at 1.45. So the market closed below its open. This is why it is bullish and it is what? Bearish. Let me use okay, now for this one, this is a Bitcoin. This is for Bitcoin. This is bearish. Market opened at what? $21,000 and it closed at $20,000. This one now is bullish. This is how I set mine. Green and red. Some uses black and white. Black for the bearish, white for the bullish. So for this one, market opened at $19,000 and closed at what? $20,000. This is the anatomy of what? Your candlestick. Now, if you can say that some candlesticks are bigger than some. Now, in candlesticks that are bigger, it tells you that a lot of trading activities happen within that time frame. A lot of trading activities happen. So there were a lot of trading activities here. Whereas this one, there is not much trading activity. Now, for this candlestick, this is the body of this candlestick. This top line you are seeing here is called the shadow or wick. The bottom is the same thing, shadow or wick. Now, for the shadows and the shadows, it tells you that no much trading activities happen there. The market was, as in buyers and sellers were more involved in this space, this small tiny space. And this is just the anatomy of candlestick. So when you see candlestick, it just tells you what happened in the market. Maybe I see it, I know what is happening. I know what has happened before in the market. Okay, let's move further. I believe we may not get everything once, but as time goes on, we will surely get it. Everything will come together. Okay, all right. That is for anatomy of the word candlesticks. Let's move further. Now, like I said, the candlestick shows the open, close, high, low of a given asset. It gives more information than bar chart. There's bar and there's line chart. I don't use it. It consists of the body, then the upper shadow and the lower shadow. So I've shown you this just now. Okay, let's continue. Types of candlestick, I've covered this also, bullish and bearish candlestick. The bullish candlestick, the market closed above its open, while the bearish candlestick, the market closed below its open. Okay, so let's continue. Now let's look at the time frames. For this time frame, I'm just going to go straight to the chart. Nothing, just sharp. So now each candlestick represents each time frame. This one candlestick represents each time frame. Now let me show you for you to understand better. For instance, now if I put my chart at a 4-hour chart, if I put my chart at a 4-hour chart, the candlestick, one candlestick will represent 4 hours. Now I'm picking on 4 hours right now. Now, this candlestick was formed within 4 hours. This candlestick was formed within 4 hours. Now let me go to a 1-hour chart. 1-hour chart. This candlestick was formed within 1 hour. This was formed within 1 hour. It's as simple as this. This was formed within 1 hour. Now, during the class we had that day, someone was asking, is there any difference? Some people used to be confused. Like, I'm going to answer, I'll be answering those questions that were asked. Yeah. Now, someone was asking, does it mean that if I use 1 hour to place a trade, my trade will only last for 1 hour? No. It does not mean that your trade will only last for 1 hour. You can use 1 hour to place a trade while you stay in the market for just 15 minutes. Now, this is just for better analysis, different analysis. That just it was it for the different time frames are from different analysis. For instance, and for different types of traders too. We have position traders, we have swing traders, we have scalpers, we have day traders. These traders, they use different time frames to do their own analysis. You get. Now for me, I'm actually a day trader. I trade every day, not really every day. Every day I see opportunity in the market. Like I open and close a trade within a particular day. I don't normally hold trade for like 2-3 days. Swing traders, they hold trade for 2-3 days. Now, what does this do for us? For the time frame, I use 4-hour time frame for my analysis. I'm a day trader. I use 1 hour time frame. You get, I don't take my trade from monthly. Position traders take their trades from monthly, daily, 4 hour. May I take my trade from 15 minutes? I do my analysis on 1 hour, 4 hours, even daily. You understand? So this is just for the different people use different time frames for their analysis, depending on the type of trader they are. So it does not mean that you must trade in 1 hour if you use 1 hour time frame to do your analysis. That is one. Then two, somebody asked me another question: which time frame is best for analysis? Which time frame is best for analysis? The time frame that is best for analysis, I use bigger time frames. Why? Because it's those bigger time frames that gives me the goods, like the major support and resistance zones. For instance, if I'm using let me say 15 minutes. I may not know that there is a resistance, then I'll go and place a buy order at a resistance. I may not know that there is a bigger resistance in the higher time frame. You get? So for instance, this is 1 hour. This is a resistance. Sorry, this is a support. This is a support. This support may not show in a lower time frame. Let me check if I'll see this support that I'm seeing now in 15 minutes. I may not see it. That is the point. So I will use bigger time frames to mark those major zones first before I take my trade. So I believe in your analysis, the higher time frames, the better. So I've answered 2 questions now. Let's continue. Okay, this is for the time frame. Let's move further. Okay, another testimonial. This one now, maybe I can't do $200 in a day. This is just about 11 a.m. They see me, they hear my students. They are making this market. I have to hail him and call him Odogu. Imagine making $200 in a single day. That is big. Like, that is big. That is up to, like, how much is that? Like 140K, because $100 is not 70,000 because of exchange rate 700 or thereabouts. That is like 140K in a single day. This is huge. This is huge. Now, these are my own trades. I don't want to show you $500 profits. I don't want to show you this kind of profit. I want to be showing you small profits, so you know big kind of. Now this one, I intentionally brought these losses at. Why? It should show you that we don't make losses in the market. Now, we make losses in the market does not mean that we blow our accounts. We only mean it's just that we minimize our losses and maximize our profits. We make more profit than losses in this market. These are to win consistently. Not that you'll be making losses. No. Now, this is the first loss was $53 on trade. The second loss was $22. But in the end, I had a net profit of $46. You see? Okay. So, let me go. Oh, I said I don't want to use. I didn't know that this one came. Okay, now this was a loss of $33 in a day, but net I had $138 in a day. So you see that this thing, there is loss. So I purposely brought out these losses to show you. I did it on purpose. There are losses in the market too. So professional traders, when we make loss, we just look at what we did wrong. We look at what we did wrong. It's not village people. One of my students was saying that she's not lucky in this market, blah blah blah. I said, don't say that. There are 3 things that are affecting the market: wrong analysis, improper risk management or trading psychology, or manipulation in the market. Sometimes our analysis can be so good and perfect, but we still end up in losses. Why? Because of market manipulations. It happens. So just have this at the front, not at the back of your mind. All right, let's continue. So this is a net profit of $128, even though there was a loss of $33. So in all you do, make sure that your wins are highly above your losses. This is how to stay long in the market. Now, let's go to candlestick patterns. Candlestick patterns. We are going to be seeing 4 candlestick patterns. The pin bar, they have 2 sides in the pin bar, which is the hammer and the shooting star. You see the doji. The doji has 2 parts, which is the dragonfly and gravestone. We see the scissors top and bottom. Then we see an hanging man. So let's start with the pin bar. The pin bar, I'm going to draw it first before I go to my slide, before I go to my chart. So for the pin bar, let me erase all these ones. I no longer need them. I no longer need you. Okay. Okay, so all right. All right, let me draw the pin bar. So I said the pin bars are of two types. We have the hanging man and the shooting star. I'm going to draw the hanging man. I mean, hammer, sorry, not hanging man. Hammer. You know how your hammer used to look like. The hammer is the bullish pin bar. Like when you see it at a support or resistance, it shows that the market is going to buy. Why the shooting star is down, like opposite, this is what the hammer upside down is your shooting star. So this one is bullish, whereas this one is what? Bearish. All depending on where it appears in the chart. Now it's pin bar actually disregards the color. A bullish pin bar may have a shaded body. Like I'll show you. Let me go to my chart so I will explain better. Okay, like this was what I was trying to say. In when you say a bullish pin bar, what you do, that is the hammer. What you do is to buy. Now this is actually a bullish pin bar. It's not a bearish pin bar, even though it has a red color. This is what I was trying to say. What determines if it is either bullish or bearish, regardless of the color, is the position it is in the chart. For instance, this one also have a red color, but it is a bearish pin bar. Why? The position. This is a shooting star. It's a bearish pin bar. This is an hammer. It's a bullish pin bar, regardless of the color. Now, this one now is actually what? Hammer. This one is a hammer, which shows that prices are what? Going up. So even though it is a what? It's a green color. So this is what I was trying to explain. Now, for the hammer, when an hammer appears in the chart, for instance, in a support, hammer in a support is a buy signal. Hammer at a support is a buy signal. Why? A shooting star at the resistance is a sell signal. For instance, look at Bitcoin. This is a Bitcoin chart for those of us that trade crypto. This is a resistance. As you can see, like this. This is a resistance. And at this resistance, a pin bar, this is a shooting star. A bearish pin bar was what given. And since this bearish pin bar was given, this is a 15 minutes time frame. It was given when Bitcoin was at $20,000, 280. Now you see that it fell from here. Those are trade futures. You short this position and use 100x leverage. I better not go over leverage your account, so please. If you short this position now, use 100x leverage. Don't say you don't blow. Okay, so now it has been what? Falling. This is what a perfect example. Market is active. It has been falling. It has now gotten to 19,000. So for those that used to short and long, so this is a what? Is a sell signal. This is a sell signal. Is a sell signal. So from $20,000, Bitcoin has gone down to $19,000, 19,900. So imagine you just holding this position like this. Now this one is a buy. This is a bullish one. What you do is to buy. You understand? This one too sold. It sold. It came back to do a retest and it dropped like from it's gave this pattern. It gave this pattern. This bearish pin bar from $20,000. It came down, went and tested the $20,000 again, and it fell woefully to where? $19,000. You see? Okay. Now this one was a mini buy, a bullish pin bar. It bought from $20,000 to $20,100. You see where the pin bar is actually a very powerful signal in the market. It is very, as in very, very powerful. Don't joke with pin bar. You can master pin bar, master it very well. I want to show you. This one is Bitcoin. So this is for crypto. This is a crypto example. Let me give you a Forex example. Let me see. Come on now. Why is it not moving? I don't want to see Dogecoin now. You see this one that gave this pin back some time ago, and it's not dropping, like it's just dropping like that. Now look at this pin back too. Like this one is shooting star, and the market dropped from this point, went as low as this point. Imagine entering your market here. Now you put your stop loss above. If I enter here, I have to put my stop loss here. You understand why it's very important you use stop loss? What people don't understand is that stop loss is a risk management strategy. It's a risk management technique. You use stop losses to manage your risks in the market so that you not lose more. Because what if, like, we put our stop loss here, they came back and went up like this one now, they just went up like this. I know there's no pin bar here, but what if something that is happening? You just save your your market, your equity. You just lose a little instead of losing more. So when you enter a market here, you put your stop loss where above it. That's for stop losses. Now let me see other pin bar. We have seen shooting star and hammer. We are seeing it side by side. Shooting star and hammer. We are seeing it side by side. Look at this one that it gave here. This was pan GPP USD. It gave this pin bar, came back to retest it and went up. Pin bar here, pin bar here. This is hammer, normal hammer. Okay, that is for hammer, the shooting star, and the hammer. So let's move on. And was there any question, any other question I got regarding this? I've answered 2 questions already. Okay, for dragonfly, for doji looks like a cross. Know what a cross looks like? That's what doji looks like. A cross. Okay, I remember the question. The person was asking me how much can he make in a day. I always say this, answer like this: the market not in my papa parlor. The market is not my father's sitting room. So I cannot tell you how much you are going to make in a day when you come here. I cannot, like, if I tell you, just call me a liar. If I tell you that if you use $100,000 to invest, you are going to make even if I would tell you that you are going to make $5 in a day, call me a liar, because I cannot do that. I'm answering somebody else's question. I cannot predict what you are going to make a day. I can only predict that in the long run you'll be profitable, but what you are going to make in a day, I can't tell you that. So this is the doji, this is the dragon gravestone doji, this is the dragonfly doji. Now this one is normal doji. A doji actually shows that the trend will continue. A doji shows that the trend will what? It's a continuation of trend. Why the this is a gravestone doji. So this one is a gravestone doji. Why this one is a dragonfly doji? This one is a bearish doji. Why this one is a bullish doji? What does that mean? When the trend is like this, like coming up, you know that the trend does not move in a straight line, and you see something like this, know that the market is set to what? To drop. Market is set to what? Drop. You understand? The same thing for this. When the market is coming like this, and like this, and like this, and you see something like this, know that the market is set to what? To buy. It's as simple as this. Okay, so let's see our slides and our chart and look for examples for our doji. Look at a doji here. Market drops coming like this. When it got here, it dropped. This I want to check for dragonfly and gravestone. Let me see if I can see some of that. Now, when they happen in the middle of a trend, know that the trend will continue. Like if you see an hammer, this is hammer in the middle of a trend. The trend continues. You get it. It can only reverse the trend when it happens at a support or a resistance. In the middle of a trend, it continues. Okay, so let me see if I can see if I can get something. Now look at this doji. This is Greystone doji. It happened here. Market has been dropping. You see, market has been dropping just like that. Let me see if I can get another one. Let me see. I want to look for this one is dragonfly, right? No, this one is gravestone. Let me look for dragonfly. Look at dragonfly here. It happened at a support, and the market was started going up. If you just learn support resistance first, master it, then this candlestick pattern gives you additional information. It gives you more information on what to do in the market. Okay, now let's see. So we have looked at doji. Let's look at scissors top and bottom. This one is I don't really use it, but it just shows you two the same candlestick, like two the same candlesticks at a point with one bullish, one bearish, and that will be all. The same candlestick at a point, one will be bullish, one will be bearish, but it has the same size, like the same, like this, something like this. I didn't really do well in drawing. So this is like a what? Scissors top and bottom. So one will be, let me say, one is bearish. This one is bearish. The candlestick. This one is bearish. This one is bullish. So when you see something like this at the bottom of the trade, know that market will start what? Buying. And the opposite, I'll show you examples. Why am I not? Market will start what? Buying and all of that. So let me go to the chart now. For scissors bottom and top, the same size, the same size of candlesticks at either the bottom, at either support or resistance. The same size, the same size, the same size, the same size. I've not seen any example. This actually happened in the middle of a trend, the same size. So the trend was continued. So there are still more like continuation patterns too. Let me see if I can get other. Oh, let me look at 4 hours. If I don't see, I'll go to another pair. Okay, something like this now, almost the same size, and the market went up. That's simple as this. This one, yeah. Okay, no, that one doesn't fit. I can't call that. Okay, why am I not seeing? No, sometimes some patterns rarely happen in the market. This one is this one. Wow, why this one is so scarce? Let me. Okay, here we have it. Thank God. Let me take off this horizontal line. I use my horizontal line to mark support and resistance points. Okay, now look at this one here. This is an example. Almost the same size, and market went what? Up. This is scissors bottom. Market goes up. For scissors top, the market will come down. market will come down. Let me see if I can get practically not seeing an example. I look at pin bars littered all over this chart. This is a pin bar. This one is a pin bar. Market will always drop. Pin bar, market will drop, and all of those stuff. Now look at an example here. Tweezers. This one now is tweezers top. The one we sell as is tweezers bottom, market bought. Tweezers top, market will come down, and market what came down. All right, so that's for tweezers top and bottom. Let's see the hanging man. That's the last. The hanging man is actually made up of 3 candlesticks pattern. You have the first one. Let me use my whiteboard. 3 candlestick pattern. That is what the hanging man is made up of. This will be our last time. Okay, the hanging man, you have something like this. 1 candlestick pattern. The middle will be either an hammer or a doji. The last one will be another candlestick pattern. So we progress. I don't know. We progress from 1 candlestick pattern, which is pin bar and doji. We went to 2 candlestick pattern, which is the scissors top and bottom. Then we are now 3 candlestick pattern, which is hanging man. The other examples are a whole lot of them, but I want to teach just this one. You get. So this is the hanging man, a 3 candlestick pattern. Okay, now let's look at some examples. This is the hanging man. Price what drops. So this is your first candlestick. The second one I said is either a doji or a pin bar, and the last one will be what, a bearish bar, and what, market will start what, dropping. This is an example of what, an hanging man. Let me see. You know that we always have a reversal, something like this: bullish, bearish first. This one is a doji, and this one is a bullish candlestick, and it went up. Okay, so let's see some more examples of the hanging man. I think I've visually taken all the questions that they asked. I started with what the market, which time frame is best. I've explained that. Which amount you are going to make. Okay, I've said that before. Now this is an example of an hanging man too. You see, what you should note in an hanging man is this: the middle, which is this bullish, this it's actually a bearish candlestick, but the third one, it didn't happen at a support that will confirm that it's bullish. So this one confirmed this one to be what, an hanging man. So when you see 3 like this, know that the price is going to the direction, is going to sell, like sell. Now for this one, this one, you say that this one is a shooting star, but it didn't happen at a what, at a resistance. It happened at a support instance. So this one confirms what, the hanging man pattern, and it what, it went up, came to retest and went up like that. So you see, this for the hanging man. So what you are going to do is don't always patiently learn these things. I didn't learn this thing in I've been trading for over 2 years now. I didn't learn these things at a go, like once, everything just enter. No, it has to be patience. Patiently learn this candlesticks pattern and practice them. You can just go through your chart and be picking at this pattern, write them down, know what they did in the market, when they happen, and with time you become conversant with this. So we started from the where did we start from? Oh God, now I want to go back. Where did we really start from? Let me look at where I started from. Unless I forgot. Okay, we started from definition of technical analysis, we saw support, saw resistance, then we saw the different kind of candlestick, then the anatomy of candlesticks and type of candlestick, the different type frames in the market, and we saw the candlestick pattern. I believe you must have learned a lot. If you have not, you can still reach me out for more questions. Thank you for going through. Make sure you like this channel, make sure you subscribe, and make sure you share this video for other traders to benefit. I remain Sarah Bamba. This is Zwitch Academy. Thank you for watching. See you in our next video. Bye bye.